Did you work this one? This cash accrual problem? You guys, I'm not going to teach you anything. All I do is motivate you to learn it. So what do you have to do? Learn it. How are you going to do that? Work. Come on. This cash accrual problem, does everybody have it still? Oh, that's good. Okay, that's a good start. You have it right where you left it on the top of your notebook last time? Oh, good. That's great. Oh, I took a quiz. I shouldn't have to do anything else. Okay, anyway. So how would you approach this thing? What did I suggest to you last time? Key accounts maybe, right? Take where you're at now, figure out where you want to be, right? You know, that's the deal. And then what were the entries in between? That's all it is, really. And deferrals and accruals are what's happening here. You're just recording transactions, right? I'm deferring revenue. I'm deferring expense. I'm accruing revenue. I'm accruing expense. I need to put those in there, right? If I'm cash basis. By the way, would it make sense to you that this company is probably cash basis right now? Seeing as you know what the cash receipts are and the cash disbursements? Okay, yeah, okay. So let's try this. I know we did a bunch of it last time, but let's kind of go through it slowly, okay? Sort of, for me slowly. Okay? If you wanted to do this thing, you would put the company name at the top. I'd start right with this. Company name, income statement, for a year ended. Okay, and let's do one cash basis, and that'd be a date there, right, guys? I'll do cash basis, and then I'm going to do the same thing. I want to have company name, no kidding, income statement, and I'd probably write accrual on it, even though you don't have to say accrual because we assume it's accrual if you don't say, but it's probably a good idea. CP exam or my exam maybe even. For the year ended in a date, here we go. So, what do you do on a cash basis statement? When cash comes in, you do what? From a customer, cash comes in. Debit, cash, credit, sales revenue. That's it, we're done. What if they're paying early? I don't care, still sales revenue. What if they're paying stuff I delivered last month or last year? Still sales revenue. When does it become sales revenue? When they pay, it's just realization, right? Realization and recognition are at the same time. Okay? What if cash goes up? It's an expense. That's it. Debit expense, credit cash. What if I'm prepaying something? There's no such thing in cash basis. What if I'm paying something that I accrued last month? There's no such thing. I don't accrue anything. There's only expenses when the cash goes out, right? It's all based on realization, okay? Recognition and realization, the same thing. Everybody got this? Okay, now obviously there could be borrowing money, right, and repaying it, which would be separate. And there could be owners investing. There could be paying dividends. And, you know, that kind of stuff could happen. But just anything that's ever going to be a revenue is revenue immediately when you get cash. And anything that's ever going to be an expense is expense immediately when you pay out the cash. Does everybody have that point? Cash basis is simple, isn't it? But it doesn't tell you how much you really made. Of course not even close. You need the accruals and deferrals to do that. So what we've got is basically cash received from customers, cash in, right? And then cash dispersed for various purposes, right? So in this problem, what did I give you? I gave you cash receipts for 480. Just what happened to cash. And by the way, we could put down a cash account and say that 480 came in and that's a debit, right? I mean, we can do this. We can use those, okay? That'd be fine. Cash disbursements for, what do we have, for inventory? That's the way I separated it, is how much? 250, we did this last time. And what do we have? I guess it's sort of a gross profit, but not really. Gross from a cash standpoint, right? It's not really a gross profit because that's accrual basis. So how much is that? Looks like they're making 230 from a cash flow standpoint. And then what would we take away from that? Cash out for operations, you think? So it's cash disbursement for operations. Okay, how much is that? Disbursement. What did I say the total was? 420, and there's 250 up there under inventory, so what's that number? 170. So what do you think your cash basis net income is? Excellent. We got it. This is easy, isn't it, guys? Okay? Nothing to it. So we got a starting point here. Now what I'd probably like to do is figure out what my accrual basis revenues are instead of my cash basis. So on the income statement for accrual basis, what am I going to have? Probably sales revenue, less what? Cost of goods sold. Seeing as I separated inventory, I'd look for cost of goods sold. Wouldn't you guys? It's obviously a merchandising firm, sells merchandise, or it's a manufacturer. It's somebody selling inventory anyway, right? I know that because they got inventory. So they're going to have cost of goods sold. Everybody good? And that's going to be what? A real gross profit, right? It's going to be gross profit. Good. Okay. Then what? Yeah, we're going to take away all our operating expenses. So I can group them all together like this, or do each one independently, like some of the problems in the book were. You got to some of those, right? Take that away, and what do I have? Net income, really net income before taxes, I suppose. But it's net income from accrual standpoint, am I right? And that's everything. That's what we're going to do. So what you need to do when you look at this, I've got a whole bunch of balance sheet accounts here, don't I? Well, yeah, these are the balance sheet accounts that I use for my accruals and deferrals. Okay, you guys tell me which of these are accrued revenue. Take your piece of paper and write it down. In fact, let's do it. Which ones are accrued revenues? Which ones are accrued expenses? Which ones are deferred revenues? And which ones are deferred expenses? Oh, which one represents that? Go ahead and write them down. You should have deferred revenue, deferred expense, and accrued revenue, accrued expense. Got it? Too bad, is it? Inventory is an interesting one. It might be the hardest one for you. It's not really what you think. Inventory, building, and equipment all fit sort of in the same category. A lot of it is expensive. Okay, what are they again? Accounts receivable is a what? Accrued revenue, unearned revenue, deferred revenue, inventory, deferred expense. Yes, absolutely it is. It's just like prepaid, right? I prepaid my cost of goods sold, right? You didn't think about it. You don't call it that, right? People think you're nuts or say that. But it's the same thing, isn't it? Okay? Accounts payable? That could be an accrued expense that relates to expenses, probably based on inventory. So, yeah. But it could be prepaid expenses, deferred expense, accrued expenses. I think that's an accrued expense. Yeah, everybody got that? Okay, good. All right. So now let's do the second thing. You don't have to write that down. I just wanted you now for thinking about it, right? When you're working a problem, wouldn't do that. Okay, when you're working a problem like this, then which accounts go with what here? I want to take my cash revenues and figure out which portion of these I've earned and which I haven't, huh? And then maybe add some receivables or add some unearned revenues or something, right? I want to adjust this number to what sales should be. I want to adjust this number cash to purchase for inventory to what cost of goods sold should be. I want to adjust operating expenses from a cash basis standpoint to operating expenses accrual. That's what I'm doing here. Tell me which accounts belong together. The fact that they're all thrown together into one problem here, don't let that bother you. You separate it, get control of it yourself. When you go to work, everything's going to look like it's just this huge mess if it is. Nobody knows what's going on. That's why they hire you, right? If they can do it themselves, they don't need you. They're going to pay you a lot of money, right? So what you have to do is take a situation that's totally out of control, figure out what's going on, and fix it. So what you do is you separate it into little pieces, something manageable, something you can grab hold of and fix that, right? Okay? Everybody agree? Really, if you're a basketball player, you don't start out playing the game, right? You don't even start out really shooting, do you? When you learn. You gotta learn every little movement you got here. I can't shoot, so I can't really do it, so I'm gonna pick that example. But you gotta learn exactly everything that you need to do to make that ball go in the hoop. You gotta understand it. And then you gotta practice a piece at a time, improve that piece, and improve the next piece, improve the next, right? Do that with your work. Expertise is expertise, right? So figure out what goes together. What goes together here? You tell me what affects sales. I think accounts receivable, debit accounts receivable, credit sales. What else? Unearned revenue, right? It's what it's going to be. Debit unearned revenue and credit sales as you earn it. Am I right, you guys? And then, of course, debit cash and credit sales. So cash goes with all of them, right? So I would put some notation on those. One maybe next to it or A next to it. Receivables, unearned revenue, and cash receipts from customers go together. I even put them in order here for you, which I won't. I'll put them alphabetically or something on a quiz or a test. All right. Which ones go with cost of goods sold? Cash disbursements for inventory and cost of goods sold. Inventory does. Accounts payable does. And cash. Right? That's it, right? And cost of goods sold. Okay, sure. Okay. But sales won't be the other ones. Okay, sure. All right. What goes with operating expenses? Prepaid, accrued, and cash. That's it. Oh, now we're organizing. So you've got those in categories, right? Put an A next to the ones that go together, a B next to the ones, a C next to the ones. You got a label. You are organized, okay? You don't write that down if you don't want to when you're doing the problem. You got to know it, right? You got to know they go together. That's true. Did you do it right? Did you actually work this problem? How many people work this problem? 1, 2, 3, 4, 5, 6. Okay. That's not good enough. Not motivating anybody this semester. It's really sad. Been way too nice, I guess. That's what it is. That's what you guys think, right? He's been way too nice. All right, so let's do it. For this kind of thing, I really don't like this. Okay, let's do sales first, you want to? Tell me which accounts we're using. Sales and what? Accounts receivable. And unearned revenue. And cash. What do I know? Let's write down everything we know. Let's solve what we don't know. What do I want to know? I want this number. I am looking for that thing, right? Key accounts are handy. Journal entries fine. Add and subtract is fine. I don't care. As long as you know what you're doing. I have students tell me after they get good at this that I'm wasting time. And they're right. I'm trying to get you guys organized and a way to think about it and everything. It takes longer than you need to. If you can just see it, fine. You always get it right. Okay? You always know where you're going. So what else do I know? Yeah, this is 54, right? And this is 65. Tell me what that means. Increase your accounts receivable by 11, which means your sales are increased are more by 11 than the cash you received. Am I right? What are the journal entries for recording sales on account? Tell me what they are. Debit what? Debit accounts receivable and credit what? Sales, right? And then what happens to accounts receivable? So that's the sales coming in here, right? That's this one. Debit cash and credit accounts receivable. So some of the that's coming out of here, isn't it? Everybody agree? And the difference between the debit and the credit to accounts receivable is 11 debit, which means what? The sales are more than the cash you received. That's it. Everybody agree? I know you already knew this. I'm just going to try to get you to use it. These are things you already knew, huh? Okay? So let yourself use this stuff. All right? So, oh, by the way, what's a really big one for sales? That's the credit sale. What about the cash sale? What would it look like? Debit, cash, and credit sales directly. So some of the sales in here might be cash sales, right? And some of them might be credit sales. Okay, everybody agree with that? And the cash coming in over here, by the way, did they tell you how much cash came in? Did I tell you? Yeah, cash receipts was 480, right? So this is 480. That 480 could include what? Cash sales, right? Collections on accounts receivable, right? And customers paying the advance, unearned revenue, right? Because how does the unearned revenue work, you guys? Let's do that. When they give me the money and I haven't earned it yet, what do I do? Debit cash and credit unearned revenue. Excellent. Okay, so when we start looking at unearned revenue, what's happening with unearned revenue? It goes up when I receive this cash here, right? Everybody agree? So, you know, this 480 cash consists of what? Cash received on cash sales, cash received on account, and perhaps cash received with that I haven't earned yet, right? You could have all three, or you could only have two of those. Most often we'll give you problems that only have two, and the CPA exam will probably only have two, not all three. Nice, huh? You're going to look at that after getting a handle on this and think, what a joke. I'm going to give you those questions on your final. I'll give you unearned revenue and sales, and ask you what cash receipts were. I'm not kidding. Or I'll give you accounts receivable and sales, and ask you what cash receipts were. Okay? Really? It's going to be that simple once you know these relationships. And I know you guys know how to record a credit sale, debit accounts receivable, credit sales. You do, don't you? And I know you know how to record a cash receipt on account. And I know you guys know how to record a cash sale. And I know you guys know how to record unearned revenue too, don't you? Then what else happens in unearned revenue? We earn it. What do we do when we earn it? Debit unearned revenue. Excellent. And credit what? Sales. That's it. Okay? Everybody got it? Okay? So where could the sales come from? Here's some sales on account. Here's some sales for cash. And here's some sales where I earned unearned revenue. Everybody good? What kind of account is unearned revenue? Liability. What is the liability I have here? What is that liability? I owe services to my customers. It's a real obligation. I'm not going to pay it with cash. How do I satisfy the obligation? I deliver the services, and at the same time that I earn the revenue, I would reduce the liability, which we did. Everybody agree? And I would do what? Increase my revenues because I earned it. Two things are happening. True. Two things are happening. Okay, guys. So what's my beginning balance in unearned revenue? 10? Why did I put it over on the credit side? It's a liability. Okay? What's the ending balance? 8. What does that mean? You decreased unearned revenue by 2, which means you earned more than you received, right? Because when you receive, you credit unearned revenue. You credit it for a smaller number than on this side. What's this side? That's this one, right? That's what you earn. So I earned 2 more than the cash I received. Everybody got it? Okay, now I didn't give you enough information to know these two pieces, right? You can't figure that one out and that one out, but you know the difference. What's the difference? 11. So I have this. So here's the way I'd do it. I'd say, okay, accounts receivable should increase by 11 net. I don't care what the components of it were for my purposes here. What happened to your unearned revenue? Got debited by 2. Both of those mean I have more sales than the cash received, don't they? We established that. How much cash did I receive? 480. Look at that. And what don't I know? Sales. I do too know it. Sales is how much? 493. Those of you who did this, did you get it? Work? Just let yourself think through it. Takes a little bit, doesn't it? So what do I know? Sales is 493. Sometimes I'll ask you for a little reconciliation of what's the difference between the 480 and the 493. What's the difference? What's the 13? Accounts receivable went up by 11. Unearned revenue went down by 2. 11 plus 2 is 13. You'll be brilliant on the CPA exam when you give them that answer. I'm not kidding. Sometimes I'll ask for that too. That's what happened, right? Maybe they'll ask for what the difference was in net income. And see, I can pick up everything, right? Reconcile accounts. Okay, you guys do cost of goods sold for me. What's cost of goods sold going to look like? Inventory, you want to use that? Cost of goods sold, inventory. When I buy inventory, I debit inventory, and I credit what? Almost always what? Accounts payable. It's accounts payable we got to work with, right? And then what do I do? When I pay it, what do I do? I debit accounts payable and credit cash. Absolutely. I think that happens. And then what else do I do, of course? Why do I buy the inventory? To sell it to somebody. And when I sell it, what does the inventory become? Cost of goods sold. Debit cost of goods sold and credit what? Inventory. Everybody knows all those journal entries, don't you? Am I right? Do you guys know when you buy inventory, and look, see some puzzled looks, you debit inventory and credit accounts payable? Do you guys know that that happens? That's the first one I did there. Debit inventory here, right? And credit accounts payable over here. Everybody got it? It's true, isn't it? You know this. Okay, when you pay for it, what do? Pay with cash. Credit cash, don't you? That's this one over here. And debit what? The account payable goes away because you paid it. You guys have got to be able to do this fast. Can you tell I'm worried about you guys after that quiz? Just a little? My intensity level's worse, isn't it? You're scaring me. I don't want to lose half of you. You're really nice people. I like you. And I'll flunk your ass if you make me. Okay? Let's go. All right, anyway. So, you recorded that too. Okay, anyway. So, then what's the other piece? After we have the inventory, we obviously sell it to our customers. We sure hope so. And what do? Yeah, well, debit what? Well, maybe debit cash or accounts receivable and credit sales. For the sales price, what do you do with the cost? Debit cost of goods sold and credit inventory. That's that one, isn't it? Okay, guys? So it would be debit cost of goods sold. What kind of an account is cost of goods sold, by the way? Expense. Everybody knows that. Remember when you didn't know that? Always people in intermediate accounting feel like they don't know anything. That's because I try to keep you working on something you don't know, because it's a waste of time to work on things you do know. That's not good. I'm not going to waste your time with that. It makes you feel good sometimes to work something you do know, so I'll give you a few of those on the test and quizzes. But mostly I want you to learn how to do stuff you don't know, huh? That'd be valuable. That'd make you more valuable. Okay, so don't start thinking you don't know anything. You have to know a lot to do this. You got to understand what all those journal entries are. So I'm not going to be talking about these entries anymore, huh? But you know them, don't you? You know them from principles. Sort of. Some vaguely, some really well. Make sure you got them wired, okay? Make sure you got them wired. And by the way, if I actually do an adjusting journal entry on prepaid insurance or something, after knowing how to do this, what a joke. Those are just boom, 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 okay? So I spend most of the time on this, chapter 3. Okay, this type of thing. All right, guys. So what do we know? What do we know about cost of goods sold? In this problem, nothing. I could have given you cost of goods sold, right, and have you solve for something else. It's okay. Just write down everything you know and solve for what you don't know. What do we know about inventory? Beginning 65, ending. What happened? Increased by 4, which means what? I bought 4 more than I used, right? Which means which account is 4 less than the cash flows? Which account are we working on? Cost of goods sold. Cost of goods sold. So you could do it this way if you want. What do I know about accounts payable? So it starts at 52. It ends up at 50. So what happened here? That's a 2 debit, which means what? You paid 2 off of the payables, didn't you? So your cost of goods sold is 2 less, isn't it? And then what do I know about my cash disbursement for inventory? It's 250, was it? Look at that. We can do it just the way we did the last one. What's my entry? I increased the inventory net by 4. I increased accounts payable by how much? 2. I reduced cash by how much? What do you think cost of goods sold is, gang, seeing as debits have to equal credits? 244. Is that the number you guys got? Did I get my debits and credits right? Okay, now there might be an easier way to think about this if you want. On this one, it's not going to work when you have accounts receivable and unearned revenue both. It's not going to work when you have prepaids and accrued liabilities both, because you don't know what the changes were. But here I know some stuff, so let's try it this way. If you want to do it this way, this is just fine. Oh, good. That's kind of big. Okay. So what did I start with in inventory again? 65. Thank you. And what did it end up? 69, was it? Okay. And I started with 52 in accounts payable. Is that correct? Okay, and what do I end up with? 50. All right. By the way, how come the inventory is on the left side? It's an asset. It's a debit. Why is accounts payable on the right side? It's a liability. Don't mess that up. All right? Don't quit thinking because something gets hard. Okay? All right, here we go. How might I find this entry this way? Just go directly. What happened? I bought how much inventory, you guys? I don't know. I want this debit to inventory and credit accounts payable. I don't know. How much did I use? I don't know. I want this debit cost of goods sold and credit inventory. I don't know what it is. I don't know either of those. But do I know how much cash I paid out? Uh-huh. So that's a credit to cash for $250. What's the debit, gang? Accounts payable. You got it. So solve for the one you can, and that one makes sense, doesn't it? You don't have to just use the difference. So if I took $250 out of accounts payable and it only went down by 2, how much did I put in, you guys? $248. So I could have asked you what purchases are, which would be kind of a neat question to ask too, huh? What must purchases be? Well, if accounts payable got credited, that would have been before the cash payment probably. If it got credited for $248, right? What got debited for $248? What was I buying, gang? Inventory. Excellent. You got it. Okay? So $248 came in here. So what's 65 plus $248? What's available? Beginning plus what I purchased is what's available, right? You know, we're doing inventory here. Cost of goods sold. Beginning plus what I purchased is what's available, right? Subtract the ending. So what's 65 plus 248 less 69? What's the number? It's a miracle. It's 244, which is the one we got doing it the other way. And that's the entry. Debit cost of goods sold, that's the answer to the question too. 244. And credit inventory, 244. So you could do that one directly. Everybody good? So if you've only got either the deferral or accrual account, you can do it directly every time on revenues and expenses, on any of them. Okay? But if you've got both of them, you're going to have to take the difference. Okay, gang. So what we've got is, what did I say, 244? What's my gross profit? What is it? 249. 249. Good. We're on our way. Okay, and we could explain the difference between this 250 and this 244 also, right? 2 plus 4. Okay. All right, gang. Let's do the last piece. So now we're going to do operating expenses maybe, huh? So what accounts do you want? Operating expense. I can pay them in advance if I want. Prepaid expenses. What else? Accrued expenses is a what? It's an accrued liability, isn't it? You need to know that. Accrued expenses is an accrued liability. Could call it an accrued liability. Could call it various payables. Okay. And then what else? I bet we pay for it. All right, go ahead and work it. Any of you haven't done it, do it real quick. It should take about 2 minutes. I'm not even joking about that. On Wednesday, we will work any problems you guys want. Look over all the problems, figure out what you don't know how to do, and come in here with problems. We're just going to be problem after problem, okay? Get it through as many as we can. And then we'll decide what we're going to do on the Monday we have left. Okay? Probably the same thing. You guys figure out what you know, what you don't know. Okay? Let's give you any difficulty. And when we're done with this today, we'll get started on some reversing. Okay? I'm sure it asks you to look at some closing and do stuff. We can do that, by the way. Next time. Okay, everybody got it? What are you trying to solve for? Operating expense. What do you know about prepaids? And ends up with, okay, so it went up by 4, so what does that tell you? Some of the cash going out, we could buy more prepaids, right? So that means the operating expense is more or less than the cash going out. Less, that's it. Okay, accrued expenses start with what? What does it end up at? So that's a 2 credit, isn't it? What does that mean? There's 2 more expense. The expense went up by more than the cash that went out, right? Okay. Because the entries are just this, right? You could debit operating expense and credit cash. That's one way, right? There's the cash deal, right? What else could you do? Debit operating expense and credit what? Prepaid expenses. That's that deferral, huh? But in order to get that prepaid expense in there in the first place, what did they have to do? Debit the prepaid and credit what? Cash, absolutely. And then there's the accrual of expense too, right? So this one's the cash deal, right? That's cash. This one's the deferral. Everybody agree? Okay, what would the accrual look like? Cash is going to be later, isn't it? So you debit what? Operating expense. So these are the 3 ways you could get operating expense, huh? And credit what? Some sort of an accrued liability, right? Like, debit salary expense, credit salaries payable. Right, guys? Debit interest expense, credit interest payable. Debit rent expense, credit rent payable. Everybody good? So these things are. Okay, so an accrued liability of some kind. Didn't you like it better when I just talked about specific accounts? It's awful. Conceptual mixed with practical there. All right, and so now what would happen? Of course, we have to pay it. Don't you credit cash? And debit what? The accrued liability, whatever it is. Okay? And there are thousands of those accrued liabilities, huh? So the cash could go out here, here, and here. So the total cash that went out, how much was the total cash that went out, by the way? 170 we figured, right? So guess what? That 170 is the total of the cash expenses, buying prepaids and paying accrued liabilities, right? And the operating expenses is the total of cash operating expenses, deferred operating expenses, and accrued operating expenses. It just is. Everything works that way. Yeah. Is this working? Is this valuable today? Yeah. I think every one of you has your head into this today. But you know what? I told the faculty at the faculty meeting today how horribly you did on the quiz, and they just laughed because it happens. Right? And I said, the thing about it is they're all showing up and their head's into it. I can tell from your body language, I can tell from looking at you. What are you doing? You're really into it when we're together, and then when you leave, you just forget about it? You can't wait to work on this until next day of class. You need to work on this tonight. I'm not even kidding. And then you need to work on it tomorrow. And then you need to work on it Wednesday sometime if you can get a break from work sometime. And then you need to show up knowing what the hell you are doing. And you're going to ask me a bunch of questions. How are you going to know which problem numbers you want me to work if you don't work? Let's go. Let's go. How much extra money you're going to make over your career because you're a CPA? I always said $1 million. Richard the other day says, Steve, it's $1.5 million minimum. What he read recently. Oh, it's a touch. You want it or not. Plus, you get to have more fun. You get to control your own life a little. You get to call your own shots. You get to work when you want to. You get to help people work on really difficult problems. You want to know what you're doing? And if you're going to be a finance person, you plan to never be a CPA, do you want to know what you're doing? If you can't read a financial statement, I mean really read one. Read one like I can. Read one like any other CPA can do. If you can't compete. Sorry. Right? Not in the game. People find out real fast. They'll ask you to analyze something, and you don't have a clue what an account in the general ledger is, you're dead meat. Okay? Now, not the day you start work, but through your career, right? The day you start work, luckily they're going to all think you know nothing because, they got me too, and they don't know anything. So, you guys, right? You get done. So, you've heard him say that, haven't you? Yeah, firms. Okay. I had Richardson too. I don't know how to do anything. Okay, so what do we do here? I want to know what the debit is to operating expenses. By the way, do I have to write this entry down, or can I just solve it right here? Of course you could just solve it right there. I think I could take 170 plus 2 less 4 and get what? 168, that's that number. Okay, but if you want, you could write it down this way. What's the operating expense if the cash going out is 170, right? If the accrued expenses went up by 2, accrued liability went up by 2, and the prepaids went up by 4, right? What is it? 168. Ta-da. Okay? So then you go back, plug the 168 in here, and what's our net income? What is that? So you didn't make 60, you made 81. And we can explain why, huh? The differences on all those accounts. Everybody good? So you want me to make one of these up for you guys to work? You want to do another one? Not for today, but for, in one of the future classes before we do this on a quiz? Absolutely. Now the hard thing is, I have to figure out what to do. Okay, make me work, go ahead. From customers. I'd like to know what that is. Question 1. Cash out. Inventory. 100,000. Cash out. For operating expenses, I hereby decree that's 60,000. Okay. On the balance sheet, beginning and ending balances. Accounts receivable, I don't know, 80,000. Ending 85,000. Inventory. Beginning 90,000. Ending 88,000. Prepaids. Beginning 12,000. Ending 11,000. Unearned revenue. Beginning 10,000. Ending 7,000. Sales. $200,000. Okay. Cost of goods sold. I don't know. Operating expenses. $63,000. Accrued liabilities. Accounts payable. Accrued liabilities. $16,000. $20,000. Accounts payable. 89,000. 91 too many. I don't know this one. Try it. You wouldn't, the math wouldn't work, guys. I don't know that one. I don't know accrued liabilities. Okay. Accounts payable are 90,000. 1, 2, 3. Okay, I'd like to know I should be able to have more. I should be able to have one more unknown. Let's make it harder. No. I'll wait for that for the test. Let's see. What's that? All right, you convinced me. What is this one? Okay. And then net income. Is 40,000. I want both. I need a cash basis statement and an accrual basis statement. 1, 2, 3, 4. I think you can do that. If you're working and it's impossible, drop me a note and no. So a cash basis statement and an accrual basis statement. Thanks for asking. But in order to do that, of course, you have to answer 1, 2, 3, 4 questions. If you answer those 4 questions, you get to it. I have one relating to sales, one relating to cost of goods sold, one relating to operating expenses, and another one relating to operating expenses, but I gave you the net income. I think you can do it. I think so. Okay? You have to do some thinking about this.
Can we do the second mic so we got like
Oh, absolutely. Or I could open the curtains either way.
smooth?
Okay. Everybody good? Got that written down? You working? I'm going to set this up. If you count together, they go together. Write everything you know, stop what you don't know. What do you bet you're not going to know too many things in one of those groups? You have to figure out how to get there. Okay? You'll have to figure out how to get there. But I think you can. I think I gave you enough. Sometimes I'll ask students to tell me what ending cash is or what beginning cash was. You do that too, right? So things like that. Or the change in cash. We can do change in cash too here. That'd be all right. You want to do that? Change. That means change. Diamond. Change in cash. Actually, it's a triangle, isn't it? But anyway, change in cash. Okay? Increase or decrease in cash. Yeah, you can do that from this too. Okay? So I gave you beginning cash, beginning, or maybe beginning, maybe something like that. The key thing is get everything down you know. And solve what's done. Okay? All right, let's try some adjusting and reversing entries. Did you give any of those a try? Last time I told you guys to take a look at accrual basis and cash basis, didn't I? And converting from one to the other. You remember that? Remember having a class with me before? Right, you just done a quiz of your shell shock, right? But I suggested that you get a good handle on cash to accrual. That's this, right? There are a bunch of problems in the book. Do them, okay? And then I suggested that you take a look at reversing entry so you have an idea what I'm talking about when I talk about reversing entry. Is that true? Did you do it? How about you? No. You know, what you're probably thinking is, well, you know, I'm not getting paid to do this, so I don't really have to do it. And that's where you get yourself in trouble. When you go to work, don't think about what you're getting paid for each thing you do. Just do it. Get as much done as you possibly can, right? Do as good a job as you possibly can, and the money is just going to pour on top of you. You don't ask for raises, they just offer them to you. You don't ask for bonuses, they just give them to you. They start getting terrified you are going to leave. You don't ask for promotions, they give them to you. Because you're doing such a good job. Okay, guys? It's not about politics. Well, that works too. But it's not about politics, right? Or being related to the right person. It's about doing it. You do it. Accounting's a really cool thing because you can be born a poor kid and be moderately successful, or maybe really successful economically, right? So it's all right. It's kind of cool. It's a neat profession that way. Okay, which things are you going to reverse? Which types of transactions will you reverse? Take a look on page 141. Some adjusting reversing entries at the bottom. Exercise 320. Okay, which ones you reverse? You can memorize their rules if you want, or what you could do is just tell yourself, I am only going to reverse things that will reverse anyway sometime in the future. If they're not going to reverse in the future, I am not reversing them, because it's illogical, okay? So let's try a couple of these things. If you take a look at this exercise, it says prepaid insurance has a debit of $5,280 representing a 2-year insurance policy dated August 1st, okay? Page 141. Prepaid insurance account, you'll enjoy this. I did a problem in the book with my principal students this morning, or this afternoon rather. About a third of them had their book. Pretty fun, yeah. So, remember those days? Okay, anyway. So $5,280 representing the cost of a 2-year fire insurance policy dated August 31st of the current year, and up above it says December 31st is the year end. What do you want to do for doing an adjusting journal entry? Let's do the adjusting journal entry first, of course. What do you got? What do I know? Prepaid insurance. What does it have in it? What must they be doing when they buy insurance? Debiting prepaid insurance, right? And crediting cash. Could they, if they want, debit prepaid or debit insurance expense and credit cash? Sure, it'd be fine. We don't care. We'll adjust from wherever they are to where we want to be anyway. It won't. Okay? All right. And then, what is this prepaid insurance going to become as they use it up? Absolutely, insurance expense. So this is really accrual and deferral stuff still, isn't it? Right? This one, by the way, is this an accrual or deferral, prepaid insurance? That's an accrual, right? Is it? What you said?
No.
Oh, you said deferral. Oh, prepaid is deferring what? No, you're not deferring payment. You paid it now. What are you deferring? Recognition of the expense until you use it. When you debit a prepaid, you are deferring the expense until later. That's a deferral, right? Everybody agree with that? When you debit accounts receivable, you are accruing the revenue. If you debit accounts receivable and credit sales, you're accruing it, right? Okay, keep working on it. Keep working on it. Okay, anyway, what date was this? August 1. What's their year end? Do I have this memorized how to do this? No. It's common sense. How many months went by? August? September, October. You mean right count August? Yeah, okay. That's 5, is it? How many months was the whole policy?
2 years.
2 years, 24 months? I bet you 5/12 if it's used up. What do you bet? Or 5/24, I apologize. 5/24, 2 years, right? 5 months out of 24 times the 5,280 must be the amount they used up. Everybody agree with that? How much is that? 1,100 even? Is it? Okay. So what account should be 1,100?
Insurance.
That's insurance expense because that's the amount you used up. Now what you do in real life is you find out what the beginning balance is in insurance expense. We can assume it's zero if they say nothing, right? But if there's already some in there, you'll just adjust from where it is to 1100. Does that make sense? Okay, they've already been recording monthly entries. Okay, I bet you anything that the rest, 19/24, you don't have to do this calculation, but obviously that's what it is. You can take 1100 away from the 5280 and it's 4180, is that right? That must be what? Yeah. And after you know that, you guys, if you know where you're at and you know where you want to be, you know where you're at and you know where you want to be, making the adjusting journal entry is a joke, isn't it? How much are you going to credit prepaid insurance for? 1100. How much are you going to debit insurance expense for? 1100. Little review of principles, right guys? Debit insurance expense, 1100, and credit prepaid insurance. Okay, now, their rule would tell you to do what with this? You want to look at the rule? I have to look at it and remember what it is. It's terrible. It's ridiculous to me. What does it say? All accrual on page 126 is a nice summary of reversing entries. All accruals should be reversed. All accruals and accruals for which the company debited or credited the original cash transaction to expense or revenue should be reversed. Oh, so if we went to an asset account, you don't reverse it. It works. The rule of thumb works. This went to an asset account. But let's do it this way instead. You don't have to remember that rule. Will this prepaid insurance ever get unused? Will you ever put it back into prepaid insurance and take it out of insurance expense anytime in the future? How are you going to unuse insurance? You can't. So I would never, ever, in any situation, debit prepaid insurance and credit insurance expense for that. So if I choose to use reversing entries, right? Am I going to reverse one that's never going to reverse? What for? I just have to make an entry to put it back in again. Oh, so you just use common sense. It's never going to get unused. Now, how about if it had been the other way around? Let's switch this problem around. So, no reversing entry, okay, guys? Everybody got it? That's the new thing in this chapter, right? No reversing entry. How about if instead the situation was when they bought insurance, they don't go to prepaid insurance with it, right? So it's still zero because they never put anything in it. Instead, what they do is they go to insurance expense, okay? So what I've got then is the $5,280 in insurance expense. Same company, just a different way of accounting for it. Is there anything wrong with when they buy the insurance policy, debiting insurance expense and crediting cash? Nah, it's going to be insurance expense anyway someday, right? Is that okay to do instead of debiting prepaid? Sure, we don't care. Because what do we want to have at the end of the year now? That's still August 1st, right? At December 31st, what do you want to have in prepaid? The amount you have not used, $4,180. Everybody agree? And what do I want to have in insurance expense? $1,100, the amount I did use. Can anybody come up with the adjusting journal entry this time? This is the adjusting journal entry, right? Can you come up with an adjusting journal entry here? You got it. Debit prepaid insurance 4180 and credit insurance expense 4180. And we have our balance sheet and our income statement exactly where we want it to be. Everybody good? Excellent. Ta-da! Would you reverse this one? Now, here's the deal. You don't have to reverse it. Everybody hear that? You do not have to use reversing entries. The company can decide they want to, or they can decide they don't want to. Their business, right? It might make things simpler for you if you use reversing entries. It really might, okay? So companies do. It makes programming your computer easier, makes training your staff easier, okay? So some people like them, some people don't. If we do use reversing entries, will we reverse this one? Let me just ask you this. Is that prepaid ever going to get reversed? Yes. When is that going to happen? month by month by month. If you're doing monthly statements or quarter by quarter, you're absolutely right. Next year at least, right? You're gonna do what? Use it. And when you use it, what are you gonna do? What's your reversing entry gonna be? If you use it, what would it be? Debit insurance expense. And credit what? Prepaid insurance. But we'd only do it for the amount we used as we used it. If we're using reversing entries, we'll do it for the whole thing. Okay? So I'm going to take this whole thing and just reverse it. A reversing entry is so simple, right? Reversing entry is just debit, reversing this one, right? And credit, reversing this one. No kidding. Now, let's think about what this does, gang. Think about what happens to insurance expense at the end of the year and what happens to prepaid insurance at the end of the year. Before you do your reversing entry, what do you always do? Reversing entries are going to be what day? This adjusting journal entry would be, if your year ends December 31st, it would be December 31st of this year, right? When do you do the reversing entry, do you think?
January 1st.
Yeah, January 1st, after you've done your financial statements, and also after you do your financial statements, you do what? Close all the temporary or nominal accounts, revenue expense accounts, don't you? So before this reversing entry, what would we have? We'd have a closing entry, wouldn't we? What's the closing entry going to do? Well, it's going to close all the revenue expenses, so it's going to zero out this expense, isn't it? So this insurance expense is going to have what done to it? Insurance expense is going to get credited as part of the closing entry for the $1,100. Does everybody agree with that? It's true. And that'll go to income summary and then to retained earnings. Everybody agree? That's the closing entry. So that's going to happen first, and that'll be at January 1st, but, well, actually at December 31st, I'll take it back. At December 31st, but after the financial statements are done, right? Before you do anything for the new year. Doesn't make any difference which year it's in, right? Just close it, it's gone. Okay, so what will that do? Let's see, that insurance expense comes out of here and I have nothing in the account. Am I right, guys? This will be a zero now. Oh, well, that's right, I'm starting a new year. But what else happens? I do this reversing entry. This is strange, right? I'm going to put in insurance expense of $4,180, and I'm going to get rid of the prepaid. Is the prepaid really gone? No, you still have it, but it looks like you've expensed it all, right? So is your income statement right and your balance sheet right as soon as you make that reversing entry? No, they're wrong. I don't care. I'm not doing a financial statement. Ah. So what will I have to do then at the end of the next year? Or if I'm doing monthly statements at the end of the next month? What am I going to have to do? I'm going to have to adjust again, and what I'd have to do is adjust this $4,180 to what? However much I used, and what will I so I'll credit this. What will I debit? Prepaid insurance for the amount I haven't used. And my financial statements will be fine. And what this allows you to do is every time your bookkeeper or your computer pays for an insurance policy, we always debit insurance expense. That's it. By using this reversing entry deal. They always go to the same account. They don't have to decide which account. They don't have to decide how much goes to prepaid insurance and how much goes to insurance expense. They don't have to worry about it, right? You just put it all into insurance expense and adjust at the end of the period. As an accountant, do you care if you have to adjust at the end of the period? Not particularly. Okay? We'll do some more of these next time. Okay, remind me. It's a lot of fun when you get into the receivables, unearned revenue and stuff. They look crazy, right? Interest receivable, that sort of thing. Have to think about it a little bit. See you guys. Don't get discouraged. If you get mad at me, that'd be good. If it makes you work harder, don't you think? If you get mad at yourself, that's not good if it makes you give up. But if it makes you work harder, that's a fine thing out there. If you're just happy all the time, no matter what happens, it's okay with you. I don't care. Just get to work. To work. Yeah. See you guys.
So